Hi, everybody. Welcome to Raise the Bar in Real Estate. I am so excited to be introducing our next guest, Natalie James. She is a rock star in the lending environment, and anybody who's in her orbit just absolutely loves her. We had a coffee date, and after that, just became really fast and furious friends. She is just a very kind, authentic human being, and just somebody you want to be kind of in your court when you're in a transaction, and especially when there's big money involved, right? Natalie has over 16 years of experience in the lending business. She started as a realtor in the business, and I'd love her to introduce herself. Hey, Natalie, thanks for joining us. And sorry that my cat has to be in the show.
Thank you, Pasha. This is fun. I'm so honored, and I've been watching your Raise the Bar series, and you are just rocking it too, sisters. So keep going. I am Natalie James. I'm a senior loan officer, which doesn't mean I'm old. I always joke about that. It just means I've been doing it for quite some time and have a really powerful team. I'm at Mortgage Express with two nice big locations for our consumers. And we've got right by Washington Square on the west side and over on the east side, right at Clackamas Town Center. And yeah, I've got about 15, 16 years on this side of the business. Started out, and I say I was a realtor in a past life. And I've been in Oregon now for 25 years, which is cool. Licensed in Oregon and Washington. Um, I'm a mother of two. I'm a dog mama of two as well. And yeah, really enjoy working with people like you and other partners and just powerful people to talk shop with today. And thanks for having me.
Yeah, you're welcome. I am so excited to have you. And for our viewers, Natalie is somebody who really goes above and beyond. I mean, to really make a successful transaction and make some clients feel very comfortable. I've watched her in action, and she just, it takes a very complex process and really helps ease nerves and helps people through the process, which can be super overwhelming, especially when you don't do a lot of transactions in your life. Um, so Natalie, I one of the things I often am curious about is what is the process a buyer should start to think about when they want to buy a house? Hey, I want to buy a house. When should they start thinking about reaching out to someone like yourself?
It's a good question. It's never too early. We don't learn a lot about this process growing up.
No,
There,
we don't.
I've been very blessed. Once a year I teach at Rockwood Prep on the east side to fifth graders about mortgage. And I bring my hedgehog Mort and we scream out how to spell mortgage. And you'd be amazed at the 10-year-olds who gobble up the information and ask the greatest questions because no one's talked to them about it. And just trying to basics understanding of how do you borrow big, humongous amounts of money to
Yeah.
get to that American dream or, an investment. So it's never too early. Now, you do need some job history. So I say, and job history does include university, includes college years. And sometimes people don't know that when we take into the 2 year history, it's college too. So
Mhm.
so 2 years is not too early, honestly, to reach out, especially if you're self-employed. And I think we might talk about a little bit of this later, but if you feel like you might have some credit restoration needs, 2 years is not too early if you're knowing that you're going to stay in one place. That's another thing is commitment. You want to know that you're staying in an area for a while. 1 year ahead of time is pretty common. 1 year is when people say something along the lines of, "We would like to buy this year."
Mhm.
Um, and we can get prepared with, do they need savings? Is it, or are you going to stay in the area? What is your job history? Do we need a little bit of time, more time under our belt? 6 months ahead is a good time because of the market. So, which on your side with real estate and in general in Oregon, we're pretty seasonal. So, if you want to start thinking about, oh, should we move in the summer when everybody else wants to? Um, Come to us as the lending side. around the holidays of the year before. So 6 months is safe. 1 year is pretty common, but 2 years is not too early, honestly.
That is fantastic advice because I think there is sometimes this maybe impulse behavior where it's like, oh, I only need a couple weeks or a month. So I think yeah, having a year and 6 months is the runway required. So
Yeah, it does occur too when people come into my office and get pre-approved and they find a home that weekend. It, if all the ducks are in a row and all the lights shine bright, it can happen. So but for those that are preparers,
yeah.
it's oftentimes 6 months to a year. Yep.
That's really good to know. And I think, as we're talking about being pre-qualified or pre-approved, do you hear kind of those interchanged quite a bit? I'm so sorry. She's such a like a attention queen.
I'm a fan. She
She literally, I lock her out and she tries to get in every time. But tell me about the difference between those two, because I do hear them used quite a bit interchangeably in the industry.
yeah. Well, we call it I'll talk about pre-approval first. So you're approved because we talk about the trifecta. I say the income, assets, credit of how to get approved for the loan.
Mhm.
But you can't get approved fully until we have the property. So we're missing the one piece. So it's pre-approved. And when you come to me, I was actually taught how to pre-approve by underwriters back in the day,
Wow.
and some pretty big dog strict underwriters too. So pre-approved means that I have reviewed all your income, all your assets, and all your credit fully, fully documented. You've submitted all your documentation. And if I have questions for an underwriter, they're right here, which is really local, nice at Mortgage Express. I'll make sure that the underwriting is going to be okay with those income, asset, credit aspects. That's a full pre-approval. You can be 100%, well, 99.9, as we all know, that if you find the property, if and when you find the property, you'll be able to close on your home loan when you're pre-approved. A pre-qualification is the basics that you have talked to maybe a lender or an online module or a portal where you've put in some information about your income, about your assets, how much you have maybe in savings, and what you think your credit score is, or you've allowed for maybe a soft pull. uh, that's a pre-qualification. It's not a deep dive. It might be the start for you, but a pre-qualification isn't the goal to get out and start house hunting. It just lets you know, go further and get the full pre-approval so you can actually start touring homes.
So I hope everybody heard that takeaway. It's when you're about to make an offer, you want a pre-approval. It just has much more weight behind it. And I think it just substantiates your offer, makes it a lot stronger. So, and if you're a
Yes.
seller receiving a pre-qualified, proof of funds and qualification letter, it's not going to be as strong. So just be, you and your realtor really need to understand the difference. So that's really, really great insight. So you talked a little bit about underwriting, and I think they're just like this, like, entity we hear about, but maybe some people think that you're the person underwriting again. So what is the role of an underwriter and why do they need so much information?
The underwriters are amazing. They carry a lot of weight on their shoulders,
Mhm.
to make sure that you as a buyer are 100% fully qualified to purchase this amount of money, with the collateral being the property. And there's a lot that goes into it. So it takes a village. I would say I a little bit as a loan officer with the collection, like I told you, with the pre-approval. But the underwriters have a real microscope into that trifecta that I was telling you about, the income and the assets and the credit. And it's even a further view than any of us can have. And each one of those has so many aspects to know the likelihood of continuance of your income, the ability to repay rule is called, ATR. The ability to repay is there for that 30-year long-term loan. The payment, is your job stable enough? And honestly, underwriters, the people think that they're the big mean dogs, that they're there to get all the information, over ask, but really they are there to make sure it makes sense for you, as if you're solo, or if you're buying with somebody, or if it's your first home, if it's your um, second investment property, if it's your third time buying, but this time you have a cosigner. They make sense completely, all income assets credit. So I thank underwriters for asking for as much as they do, because it's a lot of weight on their shoulders, and it keeps this market healthy. And as if we've been around long enough to know, there was unhealthy time that we all never want to happen again. So God bless them.
No, yeah, and I have a mad respect for them too now, understanding how important their role is. I mean, they're really there to protect you. So you don't overextend
Yeah,
yourself, get over your skis, and just get yourself in a financial trouble where you can't pay your mortgage and then you go into foreclosure. Nobody wants to see that happen. So I think they're setting
nobody.
you
Yeah.
for success, the whole transaction up for success. And yeah, unfortunately, they probably get a bad rap because yeah, it feels like maybe a lot, but they're just doing their due diligence for sure.
Yeah, they're highly trained. There's underwriters in each sector too, for government
Oh.
type loans, first time homebuyer loans. So they're really directed and trained in their expertise. So we've got some great underwriters here.
So, what could derail the underwriting process?
Um, the honestly is having a really good loan officer up front will stop a lot of the problems. So I'm here on your side as the agent, and on the borrower's side as their advocate for the bank and for underwriting. So we make sure what we do present to underwriting is a viable loan. Um, Sometimes you can get into contract on a home, and the underwriter mid underwrite. It takes about 3 weeks, as there's that 30-day kind of rule of being in contract or escrow. But that underwriting process, we want it to happen pretty early on. And there's two rounds. There's an initial round of underwriting where they initially go through all income assets credit. And then we work with the property quite a bit. And then we go back through for a final underwrite. Well, some stuff can happen in that 2 week time, as drastic as a job loss, honestly, possibly asset loss. So sometimes people are pulling from retirement funds that are stocks that lose value, or those any changes that occur with that income assets credit during underwriting can derail it. So and underwriting and the loan officer can work together and fix things as they come in, but sometimes it's not fixable. It can be completely derailed during the process. Sometimes it's the property. One thing I can think of right off the top of my head is like homeowners association. Once we get homeowners association CCNRs, or the restrictions and the covenants, and we start to learn more about how strong a homeowners association is on, say, a condominium, or how weak it is, can derail the process. That the homeowners association just doesn't actually qualify. We wouldn't have known that ahead of time, because we income assets credit, we're perfect, but the homeowners association doesn't qualify for the loan.
Wow, wow, that is something I did not know. I didn't realize that they were and could be a potential hindrance. And
Yes, yep,
and then you always hear like, don't, open a credit card, don't go buy a car during when you have,
yep.
your loan process.
Don't, yes. Yep. When you get pre-approved here, we send you the big do's and don'ts. And it's basically, do keep everything on time. So everything, sometimes when people are buying and they already own, they wonder, do I have to keep paying my current mortgage? Yes. Do I have to keep all of your payments on time, keep your job, uh, just keep everything kind of monotone. Don't get your credit pulled again. Don't quit your job. Don't the one that we all know about is at the tail end when you go to Home Depot to buy appliances for your new house. Don't open the Home Depot credit card and finance them. We want everything to stay really monotonous as it was when you got your pre-approval until the day you get your keys and move in. So the do's and don'ts list is it's fun. We say don't go to Vegas think you're going to double your down payment with simple little things.
Yeah, yeah, those are good reminders. Yeah, I think we kind of, take for granted that we can do that stuff, but yeah, this is a very serious process. So,
Yes. Yeah.
um, which what I want to get into next is talking a little bit about the finance contingency on a contract, and it is something that the buyer can exercise from the time they put the offer in all the way to close. And it's a really powerful, I think, strategy that can help a buyer potentially not go through a transaction if it doesn't work out or doesn't feel right. So can you talk a little bit about in your experience where you see buyers exercise this option in a transaction and when it makes sense and maybe when you shouldn't?
But I always say that the Oregon contract is really buyer friendly with
Mhm.
this financing contingency. Um, and I think what you're talking about is basically through that underwrite and through the transaction, if there's a an occurrence that takes place where we lose that ability to get the financing, the buyer basically has to back out. If they get denied the loan, they can back out of their purchase, right?
Yeah.
Yeah. So that's one of those things where that gets derailed is did their funds not come through like they thought? Did they lose their job? Not lost their job. What if they got uh cut hours? That cut of hours actually doesn't they no longer qualify for the loan. So um that's when you would exercise it is to back out. There are ways to you strategize if you have something occur where you could use the financial contingency, but we can, and for lack of a better term, I guess, save the loan where maybe those hours that did get cut aren't permanent. So we consider having an extra borrower on, which would you would call a cosigner for the
Mhm.
time being, knowing that your hours were going to be coming back. Um, do you stay in contract and stay with this investment, you know, because it makes financial sense down the road. So what can I speak to more about that in general, or do you want to talk about contingency of selling your own home when you own first already and you're going to
Yeah,
buy, but
let's
your
talk
home needs to
about that
sell?
too. Yeah.
Yeah. So we've seen this the last probably six, a little more than I've seen it in the years past, where sellers are allowing for a buyer to own a property that needs to sell before they can close on the new home loan.
Mhm.
Because that seller, that means they might have to wait, right? The seller might have to wait a, an exorbitant amount of time, maybe months. It just depends on how the buyer, do they have their home listed? Is it ready to go? And this is where the realtor communications come in really strong, where you guys have to, get to the nitty gritty of timing, how fast things can move. That's the beauty of having a strong realtor with great communication skills is during the contingency of selling while buying contingent.
Mhm.
Basically, we set up the pre-approval as if that home, the current home, is sold. So everything is a hypothetical, including the funds that are going to come from the sale. We work really closely with great escrow officers who prove with us to the underwriter that that home is sold and relinquished from your liabilities completely. Sometimes we even do it on the same day.
Oh
The
my
same
God.
day the escrow officer will help. So it's basically the pre-approval is set up as if something has already occurred.
Mhm.
And then it's a little bit of a waiting game. So for the buyer, it can kind of stress on the nerves a little bit because you don't know a close date on your sale. Therefore, your seller doesn't quite know the close date on their sale and
Yeah.
your purchase. This domino effect, but we've been seeing it. I've actually been seeing where that the seller that offered a contingent, that accepted a contingent offer is also contingent. So
Mhm.
the domino can get pretty far down the road, and really, really just lift you all up. The agents that have the communication skills for this, it's a tough job, but it can happen. It can happen. And as time goes through and the buyer comes on your home and it starts to get really relieved, their appraisal is good, and we get closer and closer, it starts to feel more like a normal transaction, but it can be stressful. And you just want to
Yeah.
get everything lined up ahead of time. Um, and if they all fall into place, the Plinko game, it works.
It does. It's totally domino. And like I said, it's just paramount to have communication just to keep all those balls in the air because it's like it all is just dependent on one domino falling. So
Yes. Yep.
I have been in a transaction like that before, and it really just yeah, you can do it, but you just all need to be holding hands for sure.
Yes, exactly. We have products that allow, um, it's basically a buyer on your current home that
Mhm.
will allow us to relinquish you of your current home's debt and
Mhm.
oftentimes gives you quite a bit of funds to buy the new home non-contingent
Oh,
while you still hold it, while you still hold the current home. And I'd be happy to talk with anybody more about it. It's a lot of fun. It's a program that doesn't get used a lot, but when it can be used and it does get used, it works wonders. You get into your new home and settle down, and then you can actually sell your home, your last current home, on the open market with your agent, and you have 6 months to sell it. So it
wow.
it it just has to line up right. But yeah, we've used it quite a bit over the last 2, 3 years.
So you can have a duration of 6 months, up to 6 months to list your house.
Correct. Yep.
Oh,
You have
wow.
45 days to list your house on the open air market, RMLS here in the Oregon area. Um, and then you move and you've got 45 days to list and you have 6 months to sell.
Wow. And what's the name of that program?
That's called the knock program,
Knock, as in knock knock.
as in knock, knock, new home, non-contingent.
Wow, wow. That is, I hadn't heard of that one. That I can see why that would be popular for sure.
Yeah, not a lot of lenders have it. Thank goodness we have it, and I've got quite a bit of experience in using it. It's great for the perfect scenario. It's good.
Wow, that's awesome, Natalie. I actually might be sending somebody your way because they were just asking me about the contingency option this morning. So one thing that you mentioned is the trifecta, and we always hear the importance of credit score. And what can somebody do to really optimize their credit score to look really good on paper? We know we can raise it, but what are some strategies and how long does it take?
Yeah. Yeah, over the years, I've learned almost every buyer is worried about their credit. Almost every buyer. It's whether they really do have, struggling credit or if they've got a shining bright score. Everybody worries about credit when it comes to buying a home. Um, and and the score is big. Trust me, what the score does end up coming in at does indicate what rate you're going to get most likely. And but a lower score doesn't necessarily equal loan denial. So, but if you have some compensating factors like high income or
Mhm.
what we call reserves, where you're going to have quite a bit of money in the bank still after you purchase the house or the condominium or the manufactured home, that those are compensating factors that can actually still allow you to get the home loan even with a poor score.
Mhm.
So I would say always let your lender pull credit and work with score. Do not try to do anything necessarily on your own ahead of time. There's some basic rules of credit card use, limit to balance at 30% or less. That ratio is the sweet spot. Don't get your credit pulled a lot. Try to not max out your cards. Obviously, cards, revolving debt cards are the biggest catalyst for a great score or a poor score. Other than a late on a late on a mortgage will tank your credit, and it will really kick you out of the running for buying a property for quite some time. So, but lates aren't lates aren't necessarily destroying your credit score as much as credit usage, the way you're the ratios of what you use. So, but do let a lender pull your credit and work if you think you might need help. So we'll go back to that. How far ahead do you call, right? How far ahead do you start planning? Because if you think you need assistance, a year is great timing for credit restoration. Now, I'm not in the market of credit repair. We don't sell credit repair here, but I have decades of working with people on how to lift a score. And oftentimes we can do it rapidly. It's actually called a rapid rescore, something I can see with the bureaus that's kind of easy to either move around or pay off. And we resubmit and we can lift your score pretty quickly within a week, a couple of weeks. But sometimes we need to do some repair or restoration or pay down and have that season for 6 or 8 months so that you do come into a score that's qualifying for a product that you need. So it's kind of case by case, but credit card usage, I will tell you, is don't be late on payments, especially mortgage payments. If you're in the industry, if you're looking to purchase property in your future and you own property currently, do not be late on your payments for your mortgage. But credit card usage, um, another thing people are really afraid of right now and have been, I would say, actually for the last 10 years, is what I've ran into is their student loans. So student loan debt is very common. It's actually uncommon when I work with somebody with their credit and they don't have any. It's absolute liberation, obviously, to have your student loans paid off or forgiven. But most people have student loan debt, and there were years possibly that they didn't pay on them, and maybe they're still not. And so those student loans are actually underwater because of interest. So we work with people all the time on how we view those student loan debts because a lot of people are afraid that they have too much student loan debt and they may not qualify. We view each program views student loan differently. So talk to your lender to get to the nitty gritty of how we're going to view that student loan or student loans and the balances on them. Um, but if you can get into repayment, even on an income driven repayment plan on your student loans, maybe start knocking down some of that debt too. But it's not always necessary to have your student loans, in repayment or almost paid off. But student loan, credit card usage, and talk to your lender about your student loans.
Wow. Wow. Lot to think about. It's just,
There is a lot when it comes to credit.
and this is why we need to be teaching it at such a young age. Oh my gosh. So thank
Yes.
you for giving back and teaching those fifth graders just the importance of being financially, astute and being responsible and just, yeah, everybody can do it, but just there's some simple guidelines you need to be aware of. So thank
Yes. Yes.
Thank you for breaking that all down. This has been so informative. I cannot wait for the listeners to hear this show because you just dropped some gems and so much value. I think everybody's going to really appreciate this. So thank you, Natalie, so much.
You're welcome. You're welcome.
I do have one last question though, which is always fun to ask. What advice would you give your younger self?
Oh, I would say um do wear the moisturizer. Do moisturizer early and often.
100%.
And do the saving. Do the saving, the 10%, 15% if you can. Do the savings. Do it, do it, do it, do it. But
Yeah.
yeah, moisturizer. probably buy Apple. Buy Apple.
Yeah. Oh my gosh, I love it. Yeah, hindsight is 2020. Well, this is
Yes, yes.
so fun. I think everybody's gonna know why, you're just such a wonderful person to be around and to talk to. And how can people get a hold of you, Natalie?
I'm on uh Facebook as Natalie James Home Loan Specialist. And Mortgage Express LLC, if you Google my name and Mortgage Express LLC, my if you want to put my contact info in the bar when you're done, but cell 503-887-0201. And if you want to, I would just Google me. You can jump on LinkedIn as well, but typically if I we have to Google ourselves. You have to Google yourself. People, Google yourself.
Yes,
But Google Natalie James Home Loan Specialist, you'll find me.
I love it. Well, thank you so much, Natalie. I really appreciate your time.
You're welcome, Pasha. Thank you. So I'm really happy for your Raise the Bar series. Keep going.
Thanks, friend.